Hi, I'm Tony Bancroft, the Aerospace and Defense Analyst at GAMCO Investors and Portfolio Manager for Gabelli's recently launched Commercial Aerospace and Defense ETF, ticker GCAD. During my military career, I served as an F-18 Hornet fighter pilot with the United States Marine Corps. Intensified threat levels are leading the United States and its allies to boost defense spending and readiness and to invest in cutting-edge capabilities. The People's Republic of China remains our pacing challenge. While flying in the Marine Corps, I deployed to and operated in the Western Pacific, Korean Peninsula, and Taiwan Strait. As the United States pivots to the Pacific, it navigates a much different and more vast area of operation and geographically different from the Middle East. The U.S. is moving from a desert-style operation to one more centered around water, which will require different kinds of military equipment. This means a need for increased military spending to operate in the Pacific. For example, recently Textron was awarded a large contract to replace the Army's Black Hawk helicopter. The Black Hawk was ideal for the Middle East conflict in a desert-style location, but planning for the Pacific operation requires for longer-range equipment where Textron has the advantage. Furthermore, China has increased defense spending 8% annually over the last 5 years versus the U.S. at 4%. The U.S. spending is clearly behind the curve versus China. On top of this, Russia's invasion of Ukraine has threatened and motivated NATO to increase defense spending. This could be an additional $80 billion annually in NATO defense spending, or about a 7% increase. The U.S. and fellow NATO members are depleting weapons inventories, which requires money to be set aside in order to replenish weapons sent to Ukraine. On the commercial aerospace side, we like the long-term trends of global commercial aviation. Global commercial air travel demand is returning to pre-pandemic levels, driven by growing middle classes in emerging markets. China and India expect to have more than 300 million people enter the middle class over the next decade. Revenue passenger kilometers should grow faster than global GDP over the next 20 years due to airline market liberalization, deregulation, and technology improvements, while low-cost carrier models have allowed for increased capacity and added new routes at lower fares. To support this, the global airline fleet is expected to almost double over the next 20 years from 26,000 planes to 47,000. Currently, the two major commercial aircraft manufacturers have an over 10,000 plane backlog. We believe these secular and structural dynamics should benefit the aerospace and defense industry over the long term.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.